Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, February 7th, 2017, and this is the Daily Report for Gold and Silver. We have modest gains in the precious metals markets. Gold trading up about $2.50. That is basis most active April's futures contract, with spot gold trading off just a little bit. We'll look at that in a second. This all coming after a gold hitting a 3-month high in yesterday's trading. As I said, April gold 1234.60, putting it up about $2.50 or a 0.2% gain on the day. Market traded to a high of 1237 and a low today of 1229. Now, as I said, that was the most active futures contract, because when we look at spot gold is trading at 1232 and change, 1233, putting it off about $2 and change, about a 0.2% decline. So we do have a little bit of a negative correlation today between futures gold and spot gold. Let's take a look at silver, and when we do that, we'll be looking at the March contract of COMEX trading at 1771, up 0.1% at, or a 17-cent gain, I should say, at 1771, with a low of 1756 and a high of 1779 on the day. So traders, we do have moderately higher pricing today in April gold. Of course, spot gold, as I said, was down a little bit, and I believe that that differential that we're seeing is in relation to a much stronger U.S. dollar and the perception that the dollar will not be as important of a factor in terms of a safe haven asset as gold will be in the future. And that's why I think we're seeing that kind of discord or negative correlation where we've got spot moving down and futures moving up. Nonetheless, we do have to say that for the second day in a row, we have seen highs that have been achieved roughly at, I believe it was 37, really close to that 1240 mark. And of course, we've identified this level as a 61% a 61% extension. And that, of course, is an extension of this first rally. That, of course, was followed by a 38% correction. And so now we've got this market kind of butting up with a little bit of headwinds that are coming in right at this particular price point. Now, we also can see that in terms of historical data, as recently as October of last year, this particular price point just prior to the election, because the election, the presidential election takes place right at this particular bar that's at extreme high, and then the beginning of a pretty severe correction in the market taking place. So we've got good technical data that also shows, historically speaking, there has been this price point that has reacted as a support area. And as you know, one man's floor is another man's ceiling. In other words, support and resistance are part and parcel of the same thing, depending on where the market is currently trading at. And what I mean to say by that is, obviously, as this market moves up, this would be a level that would be an area that we would look at for resistance, whereas as the market came down, in the case of what we saw in September through October, this was a price point in which this particular data point was supportive. In other words, the same price point, but one level is support, one level is resistance. Now, that being said, I do believe that it is now time to move our stops up. As I talked about yesterday, our logical point that we really want to move it up to, and this would lock some profits in, is to move it below 1220. We currently have our stop below 1180. We entered the market, of course, at 1203. So just above this line here, of course, I'm just following that 1200 mark. So just above that. So we would lock in some profits on the trade. And in this way, if the market, in fact, barrels through this particular price point, we're still in it. But if we see a slight correction in the market, or the market softening, moving down off of these headwinds here, and if in fact it would stop us out, it would stop us out in a profit. Lastly, in terms of any type of candlestick pattern that we can see or uncover in the markets, the closest thing we can see is a semi-hangman. Now, it's not really a hangman. Color's not important, whether it's green or red. You get a small-bodied candle, and then you get a tail, but the tail needs to be approximately 3 times the length of the body, and I don't know if we'd meet that criteria. But nonetheless, we've seen this candle appear on a couple of occasions. Specifically, 2 days ago, we had the same thing. And what this type of candle really illustrates is the fact that the market opened near where it closed, therefore our net change of only about $2. But at some point, they really broke the market down. And as those markets hit these lows, and these lows came in, at about 12.23, there was enough buyers in the market to move it off of those lows back up near the open of today's trading. In other markets that we look at, NASDAQ actually traded to and closed at an all-time record high today, with the NASDAQ closing at 5177. That up about 0.4%. A 19-point gain, and this, of course, is basis the NASDAQ 100 E-mini. Now, we had mixed messages and very, very moderate gains in both the Standard & Poor's as well as the Dow Jones Industrial Average. Dow Jones Industrial Average, though, remains above 20,000, and that is important to me. 20,090, up 37 points. You can see the low at 20,068 and a high of 20,155. So as you can see, at its height, the Dow was actually up over 100 points on the day, but still managed to close higher on the day, along with the Standard & Poor's fractional gains. I'll call this unchanged on the day, up 1.25% at 2288. Now, interestingly enough, we did see the gains in gold in terms of the April contract, slightly lower pricing when we looked at spot gold, but that all in light of a stronger U.S. dollar, up over 0.4% today, trading at 134 with a low of 99.91 and a high of 172. So as you can see, we closed in essence mid-range. And then really in terms of markets that traded under pressure and sold off today, we've got to take a look at crude oil down below $53 a barrel at 52.23, off 78 cents per barrel, a decline of almost 1.5% on the day. So traders, in terms of other markets that we do follow, the first chart that I do want to look at on today's trending markets part of our show is going to be crude oil. Crude oil trading off about almost 1.5%, losing about 75 cents per barrel, now trading below 53 at 52.28. I've pulled up our daily chart, and on this daily chart, we basically have our channel lines, and on these channel lines, we can see that there's been a slight bias to the upside. However, we've had, in essence, a pretty flat market with these highs at around 54 and lows at around $51 per barrel. Now, based upon that, you can see that this market is basically traded within this channel to some degree. It's not really broken out. It had a little bit of breakout below the channel lines here. And now, as you can see, we did have a low on today's candle below that price point. A break below this to me would signal a move in crude oil to about $50 per barrel. However, if the market finds support and trades off of this price point to higher pricing, I think we'll see it maintain this specific congested market sideways action, trading in between $54 and $51 per barrel. Next, I do want to look at the NASDAQ index. NASDAQ today closing at an all-time new record high. Of course, both the Dow and the Standard & Poor's closed fractionally higher, in essence unchanged on the day, but we did get a nice bounce to the upside in the NASDAQ. Now, whether you're looking at the large contract or in this case, the NASDAQ 100 E-mini, we can absolutely see this series of resistance at around 5160 that existed in the market prior to today's move. We've had a couple of attempts to really take that out. We had an attempt yesterday. You can see that high, but it closed right at this particular price point. But today's move is absolutely a breakout and a break to the upside, thus, at least for now, ending the consolidation that has been evident within this market over the last week in terms of trading. Tech stocks continue to perform exquisitely. And traders, as far as the Dow Jones Industrial Average goes, as I said, it did close up fractionally, up about 0.2%. And as you can see, when we look at this is a weekly chart, when we look at these recent highs, we can certainly see we are at the recent highs right here, but we certainly did not take them out in the same way that we saw the NASDAQ move to record highs. And traders, lastly, I do want to look at the dollar index. We are looking at a standard candlestick chart. Candlestick chart is in a weekly format. And the one thing that we've been talking about with the dollar was the fact that we correctly predicted that this dollar would come under pressure. We've talked about various levels. And if you recall from a lot of the shows that we've done recently, we continued to look at and really talk about the potential area of 99 on the dollar index as a potential area where we could find support. Now, we absolutely saw this market really have a key reversal in that the candlestick pattern that we can identify from our weekly chart now, assuming that it closes in this area, of course, there's a couple of days left of trading, isn't engulfing bullish. So, in fact, we could have seen, at least for the short term, the conclusion of this correction, which took the dollar index from about almost 104 down to 99. So that's about a 4% drop in dollar value. If that is the case and we see the market move back up, the level of resistance, the area that I would look at, comes in just below 100, just below 101 at 186. Traders, obviously, we have a good trade under our belts. We are looking at specific targets that we talked about in terms of our exit strategy, and those targets were roughly at about 1250. However, our current research shows, based upon our Fibonacci extension, that we could see some resistance come in at 1242, and for that reason, we have made a recommendation to raise our stops to below 1220, and traders, maintain your current long position. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.